1, 2. Hey, how we doing, y'all? Thanks for coming out. We're going to be talking about some of the advantages and disadvantages of public versus private models for mining. Got some wonderful panelists up here. My name is Colin Harper. I'm the editor-in-chief of Blockspace Media. And before we kick it off with some kind of in-depth questions, I just want to get everyone to introduce themselves. So, Drew, we'll start with you and then work on down.
Yes, my name is Drew Armstrong. I'm the president and COO of Cathedra Bitcoin. We are a publicly traded Bitcoin mining company on the Toronto Stock Exchange Venture Board, diversified Bitcoin mining company with legacy prop mining operations. And then earlier this week, we closed a merger with Kungsleden Inc. That manages 90 megawatts of hosting data center capacity across the U.S.
And I'm Justin Ballard. I'm the general counsel with Adon Energy Solutions. I also have a law firm, Firm 21M, and we focus primarily on Bitcoin mining related issues. And Adakon Energy is a large-scale infrastructure player in North Dakota. We also own about a 225 megawatt PPA with some expansion capabilities, and we're doing a lot of work with public and private miners at our site there in North Dakota, and we're expanding kind of all over the country.
My name is Lincoln Tan. I'm not Kent Draper, obviously just filling in at the last minute. I represent IREN. We're a North American data center business, operate 260 megawatts of Bitcoin mining and AI workloads today, expanding to 510 megawatts this year. NASDAQ-listed business, headquartered in Australia, interestingly, so yeah, a few perspectives around being listed and specifically being a foreign private issuer on the NASDAQ.
Awesome. Thanks, guys. So I feel like the public mining sector is in some ways like a very new phenomenon for the Bitcoin mining space. I mean, some of the biggest public miners around today back in 2017, 2018 were like Riot and Mara. They were just pivoting from their businesses Riot was in pharmaceuticals, Marathon was in patents, and they had just started pivoting to Bitcoin mining kind of in like the bull cycle of 2017. Now they make up roughly 25, maybe 30% on a good quarter of the entire network hash rate, and public miners have become a much larger portion of the overall industrial miner pie. So I'm curious for all y'all, and maybe we'll start with you, Justin. We can kind of hop around here. What do you think is the benefit of a miner going public versus staying private?
Yeah, well, we're private. We're the only private group up here, but I can tell you the main benefit I see for a public company is the obvious one, which is access to capital. It can be very difficult, as I'm sure everybody in here knows, even the guys that are at pubcos. Getting access to capital is tough right now, especially as a private miner. If you can manage to do so, then you got a lot of benefits in my mind, and maybe one of the biggest ones that's a benefit for being private is access to opportunities via different energy sources. Obviously there's the ESG component to that a lot of people factor in on public mining groups and just in public company processes, regardless of what industry you're in. We don't have to deal with that. And so if we have like our power plant in North Dakota, it's a coal-fired power plant. We don't have any issues with that, and we got a lot of large-scale private companies that have recognized the value to being able to come out and have access to some of the cheapest, most consistent energy you have without having to have the answer to some shareholders regarding some of the sources of that power. So I think that's probably the biggest benefit for staying private, at least for a mining company, than some of the public counterparts.
Yeah, I think you hit on the key points there, Justin, which is really it's about access to capital, liquidity. If you build a business and you go public, you can potentially get some liquidity without having to sell the whole business, sell your whole stake. And certainly, there are advantages to being private as well. Maybe just to touch on a few specific details that I think are really key differentiators. One of them is in public markets, some of the funding mechanisms that are really only available to a public company, particularly at the market offering. So when you talk about that first generation of publicly traded Bitcoin miners, Riot, Hive, who both went public or pivoted the business in Q4 2017, and then Mara, of course, they basically were able to run this playbook using ATM offerings where you basically shelf register X dollars worth of securities with the SEC, and basically every single day you can sell a little bit of equity at the market based on investor demand. That is sort of a capital markets cheat code where these guys have been able to raise hundreds of millions or more over the last few years and use that to fund operations, use it to fund CapEx. And so I think that's why when we talk about who are the miners that have grown fastest over the last really 6-7 years since the first miners went public, it really in large part is due to those ATM offerings. And so I think that is like a key point that can be overstated here, but it's also meant that a lot of these public miners have really been pursuing hash rate growth for its own sake because everyone wants to be the fastest growing miner. You may see some such miners on these chairs in front of you, and these guys are growing. They're showing that they're the fastest growing, getting a ton of investor attention, and they're really only able to do so through the dilutive ATM fundraising mechanism. And so arguably, that means that when you're a publicly traded miner in particular, especially prop miners, I think being public also changes the way you approach the business as well. Because you have these financing mechanisms available to you, you care about things like growth. You need to be one of the biggest, baddest miners possible. And that may be, and also we talk about quarterly expectations and trying to announce that you're meeting the guidance you've set to the market. Potentially it changes the way you even approach the business itself. So it's not just a financing question. It changes potentially how someone approaches the business and investing in operations on the whole. And then I think maybe one benefit of private miners that is people forget about during a bull market, but in a bear market I think is really important. Which is, when you're public, you have there's a scoreboard. Every single day, you're seeing how the equity of your company is trading. And if the market is changing really quickly, it can become more difficult to say, come to a deal or do some sort of transaction. Whereas if you're private, if you find an investor that's willing to price a round of equity at a certain valuation, things can change, but as long as that investor is willing to stand by their commitment, you can still raise that. And I think some of the most interesting fundraising in the bear market was actually... was it Marathon's investment in, was it Nodal Power? Or think about Riot and Reformed Energy, shout out to Ed and Dan. We're talking about some of the richest valuations that we've seen of private miners that really is probably only made possible because they are private. If they were public, it might be harder for them to get such attractive valuations. So sorry for throwing in so many contours there, but I mean, honestly, I think from an IREN perspective, I'd be curious to hear about you guys' experience because you guys really scaled into that public listing over those last 4 or 5 years as well.
Yeah, it's been super interesting to see how the industry's evolved, right? I think you tie it back to what Bitcoin's actually done. It's gone from a commodity you could mine in your basement in your garage with a laptop and a GPU to institutional scale, right? In the last cycle, we had Riot, Marathon. There's at least 15 to 20 listed guys solely on the NASDAQ, and this is growing at an international scale. So, when you look at the industry as literally pure competition for hash rate, we're out there trying to do our best in terms of building a business that is well positioned to capitalize on opportunities across the space. Access to capital is interesting. Access to different forms of financing is interesting. And growing the business is obviously front of mind as well. So, I think you just tie it back to, where is Bitcoin going? What are the business models that are going to succeed against that backdrop? And yes, it's a big lift being a listed company in terms of governance. Obviously, we have thousands of shareholders, but the ability to accumulate capital at scale to really deploy into massive growth and take the point around valuations, etc., and chasing growth for growth's sake. But we look at what we're doing where you're building an exahash for $30 million and it's being valued by the public markets at $200 million an exahash. And from an accretion perspective, it absolutely makes sense. So, yeah.
Actually, can I add, I think, one point to... Actually, sorry, I'll let you answer this question because I'm just going to run to the next one. But, I think one interesting thing, too, that talking about the last 7 years and how things have changed, think about how many more public miners there are now. And it's because of that exact point you just mentioned about this, the public-private market arbitrage that was available to Bitcoin miners in 2020 and 2021 in particular, where... when you raise highly dilutive financings, you buy ASICs even when it was $100 a T. If you're then being valued at $300 a T, all of a sudden, that's going directly to shareholders, and it potentially makes things like the extra G&A overhead associated with audits, much more worth it, just because of that instant sort of multiple expansion you get when you take a private mining asset and you make it public.
Do you think that's going to change, though?
Yes.
Yeah.
I think it's changing, right? Like, the space is growing up every single day. I think institutional capital is coming to the space. There's new ways to express interest in Bitcoin beyond just mining. And I think with more people investing, people are starting to really pay attention to good operations, good management, and great execution, and and strategy. And there's plenty of discourse in the analyst community, on Twitter, etc., which is, I guess, putting more focus on business models and actually good business.
So this is kind of lends into a good or a good segue into this question. You were talking about that kind of public-private arbitrage opportunity, Drew. I think there are so many information asymmetries in something like Bitcoin mining in terms of, you could literally pick almost any part of the operational ladder, and there's something that someone in the investing sphere probably doesn't understand very well about that business. Like, not every megawatt runs the same. Not every farm is run the same, even though they might have the same megawatts on their on their scorecard is another one. Same with the hash rate. I think a great example of this back in the day is you used to be able to pump stock prices by announcing, you're ordering 10,000 or 100,000, new gen miners from Bitmain, and that would be enough to move the stock price in a positive direction. All of that to be said, do you think those information asymmetries are being smoothed out and the market is getting smarter, or are we still kind of trapped in this, hype echo chamber, where it's really what you're saying you're doing versus what's actually being done is that what matters to the most of the market, especially in the public sphere?
Both. I think ultimately, when you're a lot of public companies, and the public companies that have maybe been most successful over the last 30 years have all done a great job of telling a story and building a story, building a narrative. And I think we sort of entered into this, there's almost like a spiritual component to capital markets now, right? Where why are people bidding up Tesla so high? It's because they're bought into the future of what they think Tesla, the future that Tesla basically offers. And so I think that narrative component is very real. But specifically within Bitcoin mining, if you look at the relative underperformance of miners this year, I wonder if one thing that's happened is, last cycle, Bitcoin miners were really the best proxy you could get for Bitcoin, except maybe MicroStrategy too. Like, those were the games in town. Now we have Bitcoin ETFs. We have how many public miners? 20, 30? We have many of them relying on ATM and highly dilutive financing just so they can grow hash rate and kind of announce that, they're scaling up too and they're one of the big boys. And if we think about just simple supply and demand, maybe there have just been more shares being sold. Like, if the price has kind of gone down or underperformed, it's as simple as more shares being sold than there are buyers who want to buy them kind of, at that set price, so the price goes down. And so I think that this new phase is one where we're seeing consolidation pick up for this exact reason. We're seeing investors care more about things like dilution and actual like real metrics, because if you're a private miner and you're going and investing in operations, unless you're expecting to exit and sell your infrastructure to someone else, you're doing so because you've underwritten the returns and you believe you're going to produce attractive returns without actually necessarily selling it to someone else, but just from the merits of the cash flows of the project itself. I think public miners have kind of lost sight of some of those important metrics, like return on invested capital or earnings per share. And so I think investors, now that we have so many public miners, are becoming more and more savvy. We have actually some really smart mining research analysts in this room, many of whom are on Twitter. And I think the community is just getting smarter and smarter about what's actually going on, what actually matters. And I think the game has totally changed from that scene in 2020 where it was, oh wow, they just raised money. Oh wow, they just bought machines. Hash rate's growing. I think now it's a little, investors are getting more savvy and they really are going to start to demand, attractive returns per share.
I agree, but I kind of want to hold my final thought until I see the next hyper cycle on Bitcoin, because I could see the market participants getting kind of goofy again and throwing money at public stocks that probably based on valuations that don't make a lot of sense. But yeah, I think it's matured some too, but I am kind of holding back my full judgment until we see another hyper cycle. So.
Anything to add to that?
Oh, look, I do think it's matured a lot, but there's still many narratives. We know that the majority of flow in the space is primarily retail. We know that when you overlay the volatility day to day in Bitcoin and Bitcoin mining being leveraged exposure to Bitcoin, like you're going to get even more volatility. It's quite hard to read through what's happening at a macro level. But I think based on observations over the last couple of years, you used to be able to pump the stock with a large order. Now we're asking questions about how that's funded. Will it be delivered? Will it be operating? Like, what's this actually going to flow through in terms of Bitcoin mined? Like, those questions weren't being asked several years ago. We're talking about things like the efficiency of mining, which these things didn't exist a few things ago in terms of what metrics people paid attention to. So it is maturing. I think we just need to kind of be conscious that it's still a relatively new space in terms of institutional capital, and things can only get better.
And I think, too, it's a lot more complicated evaluation of companies than I think people realize. I think there's a lot more things that go into evaluating your investment into a public miner than in most kind of the metrics you're going to look at other companies. And a lot of them are so volatile and understanding power markets. And so it can get complicated. But I am anxious to see what happens in this next, what I think is upcoming cycle. And we'll see how it works out. I don't mind being private, though. I don't mind being private.
Staying private?
Yeah, because, I can wear flip-flops and shorts wherever I go, and I don't have to worry about anything. And as an attorney, I don't have to deal with the reporting requirements of the public code. So, unlike
Drew, who has to look like a Lehman Brothers employee.
Yeah, right.
You joke, but actually did start my career in the old Lehman Brothers building. But I do think, I think that's fair. I think maybe there is one aspect, though, if I'm just going to really try to... I think when you are public, it is actually good that you do need to disclose a lot of these metrics, because I think it does actually impose a discipline.
I'm not saying you don't need to do it. I'm saying it's just no fun.
100. And I'm just trying to. This maybe is just cope because I can't wear flip flops to work. But no, I think you make great points. And again, there are just there's no perfect solution. There are trade offs. That's our CTO's favorite quote, and I think it's very much true, especially in this context.
So speaking of your company never going public and some of those trade-offs, just kind of returning back to that point of the fact that anywhere from 25-30% of the entire mining market is currently houses hash rate from public companies. We saw a kind of groundswell effect after the China mining ban, where all of these private miners were going public from IPOs or SPACs or however they could get to market. Have we reached critical mass for the actual share of the mining network being public companies? Are we going higher? Are the days of we've got are the days of we're a private miner, you're a SPAC company, we're going to merge and then we're all going to go public and all get rich? Is that over?
I wouldn't say it's over, but it reminds me a lot of the oil and gas space, which I came from, and there was a big private equity kind of push, late 90s, early 2000s through the mid 2000s, where you try to find an asset and go get some PE money and start up an E&P and then go flip it for a 10x. It kind of reminded me the mining codes going SPACs and doing all that. That reminded me of that a lot. But I think that is naturally has to slow down. And that you get groups like IREN over here and some of the other bigger publics, that their growth is going to be through scooping up some of the private companies. And I think because of the maturity that we've just talked about in the kind of investor base that's out there, just looking at mining companies, I don't think there's going to be the same appetite there was for just scooping up a SPAC because they're rolling up and going public right away. I think that what Cathedra is doing right now with Kungsleden is more of what I think we'll see going forward, because that gives a private group like Kungsleden a public vehicle to start grow their own growth through Cathedra. That stuff makes sense. I can tell you we're not even considering looking at a SPAC and trying to go that route at all. Mainly just because I don't think it's going to have the same reception that we did a few years ago. I think it gets saturated, in my opinion.
Yeah, I think There may be a handful of really big private miners right now that are probably still going to eye a public listing at some point this cycle. But we already have so many public vehicles. And so I think it's much more likely that we will see consolidation. I think also returning to your point, Colin, there are a bunch of different types of miners, right? You have the home hobbyist miner where we started. You have these, these American pubco or more like commercial miners. You have nation states, and sometimes you just have folks who are just trying to make some money. They're totally fine plugging in some machines in some sites further out on the geopolitical risk curve than, say, Texas. And there's basically a lot of diversity in the mining ecosystem. Now, I don't think we'll ever see like American pubcos really go more than 50% of the network. But I think there's also an important distinction about, we talk about pubcos, that mostly is American-oriented. Some pubcos actually have sites elsewhere outside of the U.S., and I think, especially within the U.S., I wonder if we are getting close to sort of peak hash rate in the U.S. Now, the things the U.S. has going for it respects property rights, or in some states, and it also has the best capital markets in the world, right? And that's why so many folks want to go public on the U.S. is because the NASDAQ, the New York Stock Exchange, like this is very important technology, and it's like capital technology that does not exist elsewhere. There's a reason why folks in other countries want to park their wealth in the U.S. stock market, and it is because of those property rights, the capital markets, and some of the growth that happens here. So I think that is one huge benefit. But if we're also being completely honest, and maybe this is getting more into power, how long will it be till we kind of saturate some of the power opportunities in the U.S.? And we're already starting to see it now with a lot of folks maybe going to places like Africa or South America, where they're going out further on the geopolitical risk curve to get lower cost of power. And when we think about things like HPC really taking off and data center demand here in the United States really taking off, if there's just a much higher bid for kilowatt hours and for power capacity, I think it's sort of natural that Bitcoin miners, which are kind of like a pioneer species, to use Brandon Quittam's word, we're seeking the cheapest power. We can switch off whenever it's economically beneficial to do so. I think these really economically rational miners are going to start looking elsewhere for that cheap power if we basically eat through the order book of low-cost, reliable power here in the United States. So basically, we may start to see folks with mining operations in other countries be public on in the U.S. Look at Mara, for example. They have some sites in other countries. Hive does as well. So I think, there are sort of two dimensions to that are often conflated. But I think the U.S. will probably continue to have the best capital markets in the world, and so folks will always want to be public here.
Look, I think we're an Australian company listed on the NASDAQ, and I'd have to agree that accumulating capital in the US is a lot easier when you've got 15 guys to benchmark yourselves to. There's a natural pool of investors who value that. As far as dispersion of hash rate in other geographies, I think bankable jurisdictions is critical. Like I think the institutional space has got conniptions about Bitcoin itself. If you're telling them this is Bitcoin in Africa or Central America, I feel like it's a tough sell, and obviously different business models have different strategies, and that's the beauty of capital markets. And then finally, the industry is just so large today where you're competing with HPC, you keep competing with people for power. This stuff takes 5 years to bring into the real world, 7 years in some cases. And adding 50 megawatts, 100 megawatts 5 years ago was a big deal. 100 megawatts today gets you not much, right? So the size of the ask is just getting more and more enormous. And, it's hard to scale.
And that's, you guys are saying basically the same thing about I don't know how many more large scale opportunities there are, right? You're going to have to start getting into the infrastructure build out of generation. And that takes a long time. There's a lot of bureaucracy that goes into it. And I think that's probably the natural progression is to start moving outside and looking for other fast, high growth opportunities because there's not a lot left.
But this, too, is where it's the public-private distinction is really important, because if you're a NIM on Twitter who's trying to earn the best return on capital, and you can send a machine to Ethiopia with 1 cent power, and you can buy some M20Ss, those returns probably look really, really good, and they probably would have outperformed Bitcoin mining equities this year, if you'd done that at the beginning of the year. So I think, again, it just sort of depends on the framework. And I think the folks who are going out in the geopolitical risk curve are probably already debanked, or they're not too worried about being debanked.
Yeah.
All right, we've only got a minute and 30 seconds, so lightning round, final thoughts. Just quick couple sentence answers. Most overhyped thing currently in the Bitcoin mining industry, and most underhyped thing.
Most overhyped thing is the hash rate arms race or hash rate growth for its own sake. I'd also say that in general, I think a lot of hype around the IP around cooling technology for ASICs might be overhyped as well. Most underhyped, I'm going to keep it balanced, so I'm going to give 2 and cheat. Sorry, Colin. Most underhyped thing, 1, I think the mullet data center, and basically finding ways to do hybrid data center strategies. And I think also just executing with a top-tier team, I think is just underrated. It's underrated to every quarter try to put together good results and to not play stupid games to win stupid prizes.
I would have said it's similar to Drew's, but basically the overhyped is and I know there's probably a ton of people disagree with me on this, but basically the container technology improvements, I don't buy all of it. I think a lot of this goes back to the machine and just having a good operational team to tinker with it. And I'd point at Choya's stuff they're doing out in West Texas with a test project for that. But underhyped, man, I think underhyped is the situation we just talked about with the power and just not having much left. And especially when we get HPC trying to move into the space, there's going to be a real need to have long-term locked-in PPAs like what we got in North Dakota.
Now, some interesting perspectives. This is a bit controversial, but let's talk about halvings, right? Like the entire of last year, we talked about halvings every single day to every single investor, institution and retail, and it's all you could think about. And then the halving comes and it's like, well, we know what's going to happen for the next 120 years. Like you build a business model knowing what's going to happen for 120 years around the halving events, like, and you just plan for it. So, there you go.
And most underhyped?
Underhyped. Oh, look. I mean, in relation to our business, we're obviously growing very rapidly. There's a lot of narratives around HPC and the applicability of these data centers for multiple use cases. Look, I think people are underappreciating Bitcoin at the moment. Like, we're at 10 exahash today, going to 30 exahash this year. This is massive for our business. And we're massively excited about that growth that we're going to be showing in the coming months.
Sweet. Awesome. Thanks so much, guys. Appreciate y'all tuning in. Enjoy the rest of the conference.
Next year, we are bringing the Bitcoin conference to the American West, Las Vegas. The brightest minds in the world will converge to deliver Bitcoin history. Buy your tickets now at b.tc/conference/2025.